So Equifax just dropped their Q3 earnings, and yeah, they look pretty good. But honestly, the headline numbers aren't the real story here. Nope, there's a hidden war brewing, a fight that could totally change how you buy a house and even how your tax dollars get spent. So let's dive in and break it all down.
Okay, so let's get the big number out of the way first. We're talking $1.54 billion in revenue just for the third quarter. That's huge. They actually beat their own forecasts, which tells you they've got some serious momentum right now. And when you look closer, the picture gets even better. I mean, revenue's up a solid 7%. Their vitality index, which is basically how they measure their new innovative products, it hit a record 16%. But the number you really need to pay attention to, that massive 26% jump in their US mortgage revenue. That right there, that's a clue about where this is all headed. But like I said, these numbers are just the surface. The real story, the one we're going to unpack, is a high-stakes showdown. It's a battle for control over that all-powerful three-digit number that pretty much shapes your entire financial life, your credit score. And that brings us right to the front lines of what I'm calling the Great Credit Score War. See, for decades, one company has been king of the hill, completely dominating the market. But now, a challenger is stepping into the ring, and Equifax is right in the thick of it. And that king, for the last 30 years, has been FICO. Think about it. They were the ultimate gatekeeper to the American dream. If you wanted a mortgage backed by the federal government, you had to go through them. You needed a FICO score, period. It was a total monopoly. They were the undisputed ruler of the credit score kingdom.
But you know what they say, with great power comes, well, great prices. FICO just announced they're basically doubling the cost of a mortgage credit score, all the way up to $10. And that right there is a super bold move that has swung the door wide open for someone else to jump in.
And you bet Equifax's CEO, Mark Baker, seized the opportunity. He basically came right out and said it. He called this price hike the catalyst, his word, that could finally shatter FICO's 30-year stranglehold on the mortgage market. Okay, so FICO made their move. The ball is in Equifax's court. So the big question is, how exactly are they planning to take on the king of credit scores?
Well, it's a classic David versus Goliath story. Equifax is putting its weight behind a competitor called VantageScore. And get this, they're claiming it performs just as well, maybe even better than FICO, but for less than half the price. We're talking $4.50 versus $10. That's a huge difference.
And the stakes here are absolutely massive. If Equifax can pull this off, if they can convince mortgage lenders to make the switch to VantageScore, we're talking about a potential $200 million boost to their bottom line annually. Now that's what you call a powerful reason to go out and fight for every single customer. But believe it or not, this whole credit score war, it's only one piece of the puzzle. Equifax has another major growth engine firing up, and it involves partnering with the government. And honestly, this could be just as big, if not bigger, than their fight with FICO. Okay, prepare yourself for this next number, because it's pretty staggering. $160 billion. That is how much the US government estimates it loses every year to improper payments for things like social services and taxes. It's a mind-boggling problem, and Equifax is stepping up saying, hey, we think we can fix that. And for Equifax, solving that problem represents a massive $5 billion opportunity. They're basically betting that their deep well of data can help the government make sure every single one of those dollars actually ends up with the people who are supposed to get it. So what's pushing all this? Well, there's a new piece of legislation called OB3, and it's putting a ton of pressure on states to get much stricter with how they verify people for big programs like SNAP and Medicaid. And this chart really shows you just how big a deal this is. Get this, over 80% of states are currently failing to meet the new super strict error rate for SNAP benefits. And if they don't get their act together, they risk losing billions with a B in federal funding. So the pressure is definitely on. So this is where Equifax comes in. They're rolling out a whole suite of tools designed to solve exactly this problem. We're talking about things like tracking income changes on a monthly basis, verifying work requirements with actual hours worked data, and even figuring out how to validate income from gig work and self-employment. They're doing it with a level of accuracy that, frankly, government agencies have had a really tough time matching on their own. So, just to recap, Equifax is fighting a war on two fronts. One in the private sector against FICO, and one in the public sector helping the government. So, What's the secret weapon that's powering this whole strategy? Well, it all comes down to one thing: technology. This right here, this is basically Equifax's playbook laid bare. Their entire strategy is built on two pillars: massive investments in cloud technology and a relentless, full steam ahead push into AI innovation. And this is a really big deal. It's a total game changer for them. You have to understand, Equifax isn't just a company that sells data anymore. They're actively transforming themselves into an AI-powered intelligence partner. Their goal is to help their clients make smarter, faster, better decisions. And it's not just talk. The results are already there. Their new AI models are delivering a 30% performance boost over the old systems. That's not just a small improvement. That is a real, tangible advantage that gives their customers a serious competitive edge. And they're not stopping there, not by a long shot. They're rolling out a whole new wave of AI-powered tools. Things like an AI advisor for lenders, a next-gen model to catch that super tricky synthetic identity fraud, and even a model that can spot first-party fraud, which is when people try to game the credit system. Okay, so that's a lot to take in. What does this all mean? What's the big picture here for Equifax? And maybe even more importantly, for you and me? Let's connect all these dots. When you boil it all down, Equifax is betting the farm on a really bold three-pronged strategy. 1. Take on an industry giant. 2. Solve a huge, messy government problem. And 3. Build the entire thing on a foundation of cutting-edge AI. And that leaves us with a really important question, one for all of us to think about. As our economy becomes more and more about data, all these invisible battles, these wars over scores and analytics that are happening behind the scenes, they're going to have a very real impact on our lives. So the question you have to ask yourself is, how is all of this going to end up shaping your financial future?